Oof, guys, we're not looking good at all in the stock market today. It's currently about 12:45 p.m. on the East Coast, and we have all the indexes down a pretty big amount. We have the S&P 500 down 0.8%, the Nasdaq's down 1.3%, as the Russell's down also about 0.8%, and the Dow's down 0.4%, as the VIX is up over 3%. And it looks like here the metals are selling off after they've been crushing it for the past, weeks at this point, right? Past couple of weeks. We have gold down 1.2%, silver's down 0.5%. So we're going to break down the indexes in this video and some companies, some stocks that I'm looking at here on my watch list, guys. So hit the like button, make sure to subscribe, and you might as well get your 7 fractional shares of the Max 7 stocks for Moomoo by using that link down below or by checking out the QR code right here. You guys can also go to stocksurfest.com/Moomoo. You might as well get your stocks, guys. And with that being said, cheers. Let's dive right into the video. So again, it's almost 1 p.m. here on the East Coast, so we're pretty much halfway through the day, and the stock market, no joke, has been selling off the entire day. You guys can see here, SPY opened up at $505, almost $506, right in that ballpark, right? And now we're under $500 per share. You guys can see here we're down about 1.3% from the intraday high, which again was right around $506 per share. So you guys can see we are, again, completely getting squashed. And one thing worth mentioning is yesterday, notice where we hit yesterday, right? We peaked at about 506, 506.50. And again, this morning, we hit that point and we got rejected, and it's been downhill since, right? So we failed to break out of the highs from yesterday morning, this morning, right? And now we're taking out the lows from yesterday. We're at a fresh low here on the 5-day on SPY, back in the high 400s, right? And on the 10-day chart, we're at a low, clearly on the 20-day chart as well, right? So SPY is getting squashed in the short term, guys. And triple Q, it's the same thing. It's the same story, right? We're at a low on the 1 hour chart, 20-day 1 hour. We're at a low here, or rather, we've been downtrending all day on the intraday. We're at a low on the 5-day chart. It's the same thing, right? So this is a much-needed, or was a much-needed sell-off for the stock market, guys. Let's be honest. This entire year, we've gone straight up. I mean, it is what it is. We are in need. We've been in need of a, sell-off. And now we're actually approaching the lows from around 2 months ago on triple Q, being about 424. That's where we're at right now. And SPY is, let's see, guys, pretty much right at a big support as well from a couple of months ago here, or weeks ago. Let me see here, guys. Oops, that disappeared for a second. Let me see here. Yeah, we're getting close to 495, which you guys can see that's where we held in the middle of February, heading into the end of February. So keep your eyes on these levels, very big levels coming up. But if you're freaking out overall, you're panicking, oh my God, we're selling off, right? Just realize this is short-term volatility. The stock market's still up a ton. This is not the end of the world. This happens all the time. At the end of the day, guys, we're only down 4, 5, 6% from recent highs on these indexes. Not the end of the world. So what do you guys think? Let me know your thoughts in the comments about that. And when it comes to stocks that are moving on my watch list, let's see here, guys. We have DJT moving, which this stock has gotten destroyed. I mean, holy smokes. It was at $80 back in the end of last month, just 3 weeks ago, and now it's at $25 per share, but it is up 12% on the day. And did I not warn you guys that you have to be careful with this one? And yeah, now we're down from the highs about 70%. That is just unfreaking believable, guys. The fact that this has come down 70% that fast, but am I surprised? I mean, no, I'm not. Again, guys, we talked about this. I told you all the volatility that is with the stock, and you all know that. It's pretty obvious, right? So let's see if we start maybe rebounding over, $28 back into the 30s. This could end up being a recovery play at this point. It's got to be considered potentially a recovery play considering how far it's gone down, but who knows? Maybe it continues to go down. That's the risk, right? So DJT is getting squashed, AMC's up, which, I mean, this thing is it's bound for bankruptcy in my opinion, but it is up on the day 6%. We have Shopify up 1.4%. Let me pull up Shopify's chart and show you guys what's going on. Nothing really crazy. We had an inverse head and shoulders. That clearly did not play out. So let me actually clear the drawing set. We have a death cross on the 4-hour chart heading into earnings, which are coming up in May, early May, on the 8th of May in the morning. So keep your eyes on Shopify. And we got earnings out of ASML, and this stock is down a good 8% right now, guys. You all can see if I pull the intraday chart up, we got earnings out of them. Their stock is gapping down big time. So let me show you what this company did. Let's go. Here we go, guys. EPS $3.38, which missed the $3.43 expected, and it looks like here sales missed as well. Oh man, $5.75 billion versus $6.13 billion expected. So double miss out of ASML, which is really not good at all. I'm not seeing anything here on guidance, but yeah, looks like its earnings report sends jitters through chip equipment sector. According to Barron's.com, ASML executives say China continues to represent in the ballpark of 20% of order backlog. ASML executives say they see demand for equipment from Chinese customers remaining strong. There's currently no reason they cannot continue servicing equipment in China. So again, this stock is selling off 8%. And overall, guys, look, this thing has done very well from $563 back in the end of September to $1,050 just about a month and a half ago. This is simply a pullback. I know we're under the moving averages. I know we're at a 2-month low pretty much. But, guys, we're still holding an uptrend. It's still looking pretty good. If I show you guys this could end up being a juicy dip buy on ASML. I'm not in it yet right now. I'm not buying it personally right now, guys. All I'm saying is keep your eyes on the dip. We're getting pretty oversold. Let's see how this plays out. But mind you, again, they did double miss, which is not the best look. So I'm personally going to let the dust settle a little bit, and then we'll see where it goes from there. So what do you guys think about ASML? Let me know your thoughts down below in the comments. But yeah, that's a quick breakdown on that one. And by the way, guys, tomorrow we have earnings out of Netflix, which you guys probably know. We've covered that before here, and I'm sure you all are in tune with the earnings that we have this week, right? Netflix is down 1.4% right now. It's looking awfully toppy, I'm not going to lie. Heading into earnings here, which are on, again, tomorrow after the bell, right? On the 18th, whether that's today, tomorrow, depending on when you're watching this video. Either way, we are down about $30 from the recent $639 high, or about 5%. So we're not down a ton from recent highs heading into earnings. But yeah, man, this is one that I'm excited about. And look, last 2 earnings reports, they've crushed it in terms of the actual earnings and, of course, the stock price, which I'm not going to lie, that's setting the bar super high for this earnings report. And if they don't do very well, let's say, for example, hypothetically, earnings aren't great, maybe they're not up to par, maybe the stock ran up way too much, you could make an argument, look at this window right here, you could make an argument that Netflix could drop to this point right here. Maybe not straight down to 500 and a straight line, but over time, let's say they don't do well on earnings, it could come down to 500, arguably. And the thing is, guys, even if it did that, let's say it got to 500, 550 even, let's say, the uptrend would still be holding. We would still be above the highs from just a couple of months ago. Isn't that crazy? We would just essentially erase the gain from this year. That's the crazy thing. If Netflix dropped $100 per share from where it is now, we would be exactly where we were just 4 months ago. Not a big deal. And honestly, that would be healthy for the chart here. Maybe not all the way to 500, but you guys know what I mean. And that could even be a dip by opportunity. Who knows? Here on NFLX. But overall, I mean, it's these past two earnings are setting the bar pretty high. If you guys take a look at two earnings reports ago, the stock went from $345 all the way to about $400 in a day. So that's a 15% move right there. And you guys want to know during the last earnings report what the stock did? It was at $485. Earnings came out, boom, next trading day it was at almost $565 per share. It was up 16%. And this is not a little company we're talking about here, guys. This is Netflix. So we're talking massive moves here. So yeah, setting the bar pretty high. And let's say they do crush it and we do start breaking out again. Who knows? Maybe we do start going towards the all-time high, which I forget at this point. What is it? 700? Yeah, that could be within striking distance at that point. But yeah, let's see how it plays out. Make sure to subscribe, guys. Let me know your thoughts in the comments. And do not forget to check out my Patreon if you want to be a part of the portfolio that I'm building. Discord chat, exclusive content, the charts, all that good stuff. That's on Patreon, and you might as well get your 7 fractional shares for a moo of the Mag 7 stocks with at least a $100 deposit by using that link down below, checking out the QR code right here, or by going to stocksurfest.com/moo. And with that being said, cheers. I'll catch you guys later.